differing ideas. Like I wanted to spend a lot of money initially, investments, like build up a production base, while CE was, no, we need to save, we need best expectations, we need to like take this slowly.
Usually it's the other way around.
So yeah, we met in the middle.
No.
And overall through the entire thing, it was all of us kind of begging CE for money to actually do things. And sometimes we got it, sometimes we didn't, sometimes we met in the middle. But all of our members, all of our different business segments, we're good.
Okay, so let's start from vision. I remember beginning of this game, Zach said we're gonna make the cheapest camera and let's do the best of drone. So here we go. Our vision is to be the global leader in high quality advanced drone solutions for all customer levels. And we also want to offer the most cost efficiency cameras to maximize volume and market share. And from there, we have our strategic plan. We initially invest in our technology as well as the automation system. And we also have different strategies by product segment. And at the same time, we adapt to regional market difference. And I just make sure the cash flow is strong to support all departments. So our competitive okay, so we have two lines. Product cameras, we focus on low cost and high volume. And for drones, we want to bring the best technology and high quality. And we early focus on technology investment as well as the automation system. And we initiate R&D in innovation and expand our workstation. So we build a very strong foundation for the further growth. And for the marketing on North America and Europe, we initially focus on quality and features. So we adapt a little higher pricing, but for Asian Pacific and Latin American, we focus on low price and affordability to penetration and volume.
All right, cool. Start off our segments, our product strategy, cameras, I already mentioned low cost leadership. A couple key things, we limited number of models, which allows us to build economies of scale, low production costs, and also the cameras just bare bones, as few features as possible for low cost per unit. As you saw there, we try to keep our cameras PQ rating below all of you the entire time. We go to drones, product differentiation, more features, it means better we can use a premium price, a wide variety of models, all the different segments of like drone users, so racing drones or drone enthusiasts or professional surveillance, I don't know, just there's a model of drone for everyone. And keep R&D, go innovation, we'll get that later. We tried to have the best drones in the market, but whoever Team D is, we could not catch up with you guys no matter what we did, so.
Right. So I will present our marketing strategy, which was key part of how we support our overall business goal. For the cameras, we use the competitive pricing across all regions to attract price-sensitive customers. We focused on high volume and increasing market share. We adjusted pricing slightly dependent on regional demand. We maintained moderate retailer discounts to balance demand and margin, and we increased advertising and search engine spending over time to stimulate demand. At first, we weren't spending as much money on advertising, but as time went on, we realized that advertising is important, so we spent more. And we leverage both online and retail channels to maximize global reach. As for the drones, we applied premium pricing across all regions to reflect higher quality and PQ rating. We focused on differentiation and strong brand image. We limited discounts to maintain premium positioning. We didn't want to put a lot of discounts. We invested more in advertising and search engine marketing globally. And we also increased marketing spending over time to support the demand and the visibility. So another important part of our marketing strategy was adapting to all different regions. For North America, we were in a highly competitive market. We increased the advertising, search engine spending mid to late years. we kept camera prices competitive to protect market share, and we maintained premium drone pricing with strong marketing support. As Zach said, at first we were trying to make like bad quality cameras and focus more on our drones, and that did actually work out.
It's hard to do, make bad quality.
For Europe, Africa, we had a balanced and stable demand. We used steady pricing and moderate advertising focused on brand awareness and limited discount to protect our margins and maintain strong P&Q rating for drones. For Asia Pacific, we had a price-sensitive market, so we set tightly lower camera prices to capture the volume. We used targeted promotions, moderate discounts for cameras, and we increased the marketing later to stimulate our demand. As for Latin America, it was a smaller but still a growing market, so we used the competitive camera pricing to increase our sales. We applied selective discounts in early years to gain market entry, and we also focused on brand building for drones with consistent advertising. To summarize our marketing decision, we followed the 4 P's model of marketing. For cameras, our products, it was limited features and models to reduce cost. We focused more on reliability and basic performance. As for the price, we had a competitive pricing across all regions, but we still had lower prices in Asia Pacific and Latin America to increase our volume. For Place, we had strong presence in both online and retail chain. We wanted to reach like a widely audience, and we focused on wide distribution to maximize market share. As for the promotion, we increased advertising, search engine, and spending over time, and moderate discounts to stimulate demand without hurting our margin. As for the drones, our product, it was high P&Q rating with advanced feature, continuous investments in R&D and innovation. For the pricing, we had the premium pricing across all regions, and we maintained higher prices in North America and Europe because we had high demand in them. For the Place, we focused both on online and retail channels, just like the cameras, and premium positioning through selective distributions. For the promotion, higher advertising spending to support differentiation, limited discounts to maintain premium image, and increased marketing over time to strengthen demand.
Cool, back to the production strategy. So this is one of our weaknesses, I'd say, but we kind of just expanded the workstations and some tables as we needed them, with the ultimate goal of making sure at no point there was any overtime assignment. If we were to go back and do it again, we probably should have forecast what demand is going to be and like build all these workstations and expand production well beforehand, but it worked for us. The key thing we had was immediately investing in robotics upgrades, because that actually takes down your labor team from 4 to 3 people, 25% cost reduction, and increases their yearly production. As far as the circled areas, as long as projected command we could actually handle our projected camera command, we were good to go. And towards the end, we had started making money off our robotics upgrades. As far as compensation labor strategy, always just slightly above the industry average. This increases the efficiency of the production assembly teams, and those productivity gains will hopefully offset the higher labor cost per unit, and as always, investing in employee training. That was the idea, so we ended up with fairly low cost per unit assembled with average productivity. I believe if you see there for labor costs, we are the industry low, and most of this was due to high R&D spending because they compounds. The more you spend in R&D, it gives you a bunch of production efficiencies, and it stacks year to year, so we started investing in R&D very early. And yeah, so we actually looked over the whole after-action report. Our operating margin is one of our company's key strengths. The bold and green is 25% above the industry average.
All right. So my part is corporate citizenship, and because all my teammates did a really great job in marketing, in controlling the margins and profit, and investment in the drones and the camera. So this part for me is just rather simple. It's just I would treat it as a side part supporting the whole plan, and especially like for the non-profiting part, and also deduct taxes. Okay, so it also made our overall plans to become complete, and I did do a few things like improve working conditions and also follow up with environmental sustainability. And also, we monitored our suppliers, and also we do a little charity for tax purposes, but also, for human nature. We're all good people. And for the special contract offers, that I treat it as another improvement for the volume strategy, because for the cameras, we do want a wider volume, and especially in B2B strategy plans, that we treat this as another boost. Also, we choose a 20% discount all over the 4 regions, but actually the North America is the greatest region performance overall, and I choose this amount just like play like a video game. So whatever the greater outcome it is, whatever we choose. So fair discount. And that is basically the outcome, and the contract price is 312, and for the Europe Africa is slightly lower, and because I treat that as the buying ability, and their financial statement is different in different countries, and our value index remain at 44 to 45, but everything shows pretty positive, especially in the ROI and cash flow, and that gives a pretty good confidence. And special contract offers works with the charity and also with environmental protection, so it kind of just works together. And so I think this two part really fits with overall strategy and give us actually a very good feedback.
Okay, there's 3 stages for financial strategy. The first stage, I start with paying off the high interest loan. So that by paying off the loan, our credit increase. So I can secure some low interest loan. As you can see, our interest expense is pretty low, and our credit rating, interest coverage ratio is very high. And I also issue a lot of stocks to raise capital. So we have a lot of cash in hand to support all the other departments. So on the second stage, I kind of lay back and keep monitoring cash flow and support special contracts. And soon I realized that won't work, so I stopped aggressive debit paying. Instead, I use the cash to buy back stocks and pay dividends. By doing that, we can increase shareholders' value. As you can see, our shares of stock outstanding is pretty low. And by doing that, our EPS and ROE increase rapidly at the last stage of this game, and our stock price is high.
As far as competition, mentioned before, we wanted to keep our cameras worse than everyone else's, and we tried to keep our drones better than everyone else's. It didn't really pay off, but we did realize that, I'm going to assume that everyone shows relatively similar strategies. See by this graphs there, we're all coalescing in the same area. So instead of trying to differentiate our products at the end stages, we just put all that money into marketing and improving our margins. But to be completely honest, we were very reactive when it came to you guys, and we were kind of in the back of our heads. We didn't put a whole lot of thought toward competition. Just making sure our cameras are worse than yours and our drones are better, which they weren't. But as you can see, yeah, so the average price to quality is combining drones and cameras is, grew a little bit, but it's fairly static. At the same time, costs also mostly static. So even though we were improving the quality of our drones, they weren't actually costing us that much more to produce.
So there are 2 major changes during this game of our decision making. The first one is, instead of maintaining a strong cash flow, by the end of the game, we realized we need to use our cash efficiency. The second change is, instead of treating North America and Europe As our main market, we focus on more of Asia Pacific and Latin America. So the result is we better use our financial resource, and the second is improve market performance in high growth regions. So our strategy for next 2 years, we will still focusing on how to use our money efficiency, and we will continue investing on high growth marketing, and we will strengthen we will put more money on marketing. We will improve our product competitiveness, especially in the drone market. We will keep continued investment on the technology of drone and improve the quality. And we will balance growth and financial stability.
So for our conclusion, I think our management strategy was fairly effective. I think we can all agree on that. Really helped that everyone specialize in one business segment and improve on it year after year after year. And we did obviously help each other out, give each other feedback, decision making by consensus. As far as another weakness of our group, we made all of our decisions on an annual basis. We're a very reactive company as opposed to really long-term planning. Because we found out a strategy that worked very, very well for us, which was treated like a video game. Every single year we go through our segment and just pull levers, see what affected what. Change marketing a little bit, change amount of money, going into different strategies and whatnot, and just seeing what improved EPS and ROE kind of versus making our decisions year one and following through with them. Every single year was whatever is most effective for this year versus sticking to a hard strategy.
For our lesson learned, we learned so many things. One of the couple things that we learned is that marketing strongly impacts demand and sales. So having a strong marketing really does impact the demands and the sales. Pricing must adapt to regional markets and condition. You can't just go put a high cost for the cameras and the drones on a market that doesn't have as much demand. Communication within the team is very important. Avoiding paying off loans too aggressively, maintaining financial flexibility, do not hold excessive idle cash, allocate resources efficiently, invest in marketing earlier to support growth and brand development.